Well, it's great to be here. I think basically over the last month or two, I've met with over 100 hedge funds in the United States and Europe, and everybody wanted to buy into China, but they were just waiting for a catalyst. So basically what you've seen the last week and a half is institutional investors didn't want to be the last one in, but they also don't want to be the last one out. So there's going to be a lot of volatility. It's natural that you were going to have weak trading yesterday. You might see some weak trading today. But frankly, I think you still have another 1 to 3 weeks where there's good upside. Key ratios were down too low at around 8 or 9. Now they're probably around more at 12 or 13. But I still think prices across the board can go up 10%. What you see is we're in the middle of the Golden Week holidays in China. So a lot of Chinese investors have been out vacationing with families. The stock markets have been closed. They haven't been buying the A shares. I think that they'll start buying again over the next 1 to 3 weeks. The bump is not dead at all. I think you have a lot of the negative contrarian people like Stephen Roach, but I don't think they have a firm grasp of what's happening on the economy right now.
Yeah, that seems to be the thinking, particularly around the areas of demographics, particularly as far as that is concerned, and perhaps that being one area that keeps Beijing up at night. But there seemed to be a lot of attention on the stock market last week with the easing measures and this sort of relending facility that they can tap the PBOC for. When do you suggest that this starts to translate to demand?
Yeah, exactly. I mean, your previous guest, Michael, stepped harping on demographic issues, but it's funny to me that a lot of these analysts don't talk about the demographic issues in Japan or in South Korea. Japan obviously has had a bumper year, even though those two countries have worse demographic issues than China. So for me, I think you're going to see the PBOC is going to start getting the liquidity into the companies so that they can lending facilities so that they can buy equities. So I expect over the next 3 to 6 months, the A shares to go up. Now, let me be clear. The economy is still weak, right? Real estate's a mess. It's not easy for China to replace 30% of that real estate consisted of the overall economy with Xi Jinping's new productive forces like NEVs, like batteries, because, Sam, as you just said, the European Union today might continue with the high tariffs on Chinese NEVs. So China is going to run into some export issues. But I'm a firm believer in the A-share market because the Chinese government doesn't want to reinflate the bubble in real estate. That's why they're okay with 10, 20% price drops in real estate and aren't panicking there. But I do think that they want to inflate a stock equity bubble. And that's why they've been really trying to reform and audit this CSRC and really focus on having better companies because long term they understand they need a strong capital markets. So short term, still very negative on real estate, but short to medium term, very bullish on A shares.